Hello, everybody. So, I've been threatening to discuss the Fibonacci and how I use the Fibonacci for a while now. So, firstly, just to lay the foundation for this video, this is really not a in-depth understanding of the Fibonacci sequence. And I think for that, if you really want to get into it, there are lots of resources on YouTube that will give you a deep understanding of what Fibonacci is all about. But for now, in terms of trading, it's really just a number sequence which price action uses as levels. Okay. And I'm going to start by just showing you how I've configured my Fibonacci. Okay. So there we go. So the key areas that I'm watching for are the 50%, 61, and 76.4. Okay. These are the areas that I'm watching for on the Fibonacci expansion, because that's typically where there will be some kind of action taking place with price. Okay. Then the next levels are my breakout levels, and the one is 161.8%. The other one is 200%, and the other one is 261.8%. Okay. Now, essentially, it's a number sequence from 0 to 100, and then there are different levels in between. Okay. And you'll see now how price interacts with each one of these. The 23 and 38 is applicable, but for me, it's not something that I trade off. So I will trade off the 50, 61, 76, definitely the 200, the 161, and the 261. And I'll show you how we do that. Okay. So that's typically how I structure my Fibonacci sequence. You'll notice in my range break videos, I use a Fibonacci for the range break as well. And these are range break targets that you see here. Okay. So let's just delete that. So I'm using the DAX for this, and we're using a 1 hour chart. Okay. And I'm going to use this leg to the upside here just to show you. Actually, we're going to start at this area here. Okay. So what I want to do is from this low to this high. So this was the swing low, this is the swing high. So I want to know where price is going. Okay. So I put my Fibonacci on. And now what I'm looking for price to do is I'm looking for it to hit the 50, which it often does, then the 61 or the 76.4. And you can see how we bounced off a 76.4 here. Okay, so essentially you could have taken a trade for a long on the top of this bar with a stop loss over here. Okay, but now you can see how it interacted with the 23.6 and came back down. So you can see that the levels is where something is going to happen. You can expect something to happen. But I just want to delete this Fibonacci expansion now and put it in again. I want to put it in a different way. So I just want to swing it across to there. So now I've just reversed the numbers. And the reason I've done that is that if there's a breakout, I want to see where it's going to. So my first breakout target is the 161.8. Look what price does. Okay. My second breakout target is the 200. Look what price does. Okay. And we haven't moved much from there. So that's the one area. Let's just delete this. Okay, so let's look at this level up here. So where did we turn to? We turned at the 38.2. See that? And we moved and broke to the upside. And let's just want to find us another. We're going to have to increase our data. Okay, so here's another nice one here. So from the top here to the bottom here, okay, so the price moved down. It's turned. I want to know where it's going. So I put the Fibonacci in, and I'm looking for any kind of selling that's going to take place at the 61.8 or the 76.4. And you can see quite clearly that we start getting a little flag that's built here. Just draw it in. So you can see there's a flag, and then we break to the downside at a level. So the 61.8, a level, if you look to the left, you will see that you've got all these tails touching this area as well. So that is a level. Broke to that level, and we broke to the downside. Okay, now let's just swing this around. So that's the normal way that we do it. I'm just going to swing it around because now I want to know where price is going. I know that I need to get in there. It's created a higher, sort of a lower low. Right? So price has come down. It's retraced. There it is there. Okay. Now where is it going? Now there are a couple of ways of working it out, and let me show you the one way. So that's the move. So now I can take that to there, and you can see how there is some buying happening on that level. So that's the measured move. Or I focus on the Fibonacci, which is what I like to do. And you can see the 161. There was some profit taking. We then hit the 200, and we fell short of the 261.8 over here. Let's just clear this out. And then on, take this move here to there. Can you see what happens? So again, we're looking at this move to there. So we're looking at this move down, and it retraces. Where's it retracing to? It's retracing to first the 50, then the 61.8, shallow step in, and moves down. And if this Fibonacci lines up with any of the other levels, and you can see what level it's lining up, this tail here, see that? That's where it's heading for. It's testing this breakout again, and down we go. Okay, now let's just delete that, and let's figure out where it's going. So in order to do that, I must just swing around my Fibonacci. So if we break this level, where am I going? That's the first area. It lines up on the left with support. Second one, it breaks through, but look on the left here, it lines up with support. 261 it hits, and we actually even go further than the 261, but those are typically the levels that I utilize most of the time. So the critical thing about the Fibonacci is that you want it to align to any other levels that you have. So any of the other levels that I've shown you in the other videos, those are the levels you want to adhere to, and then obviously you want a Fibonacci retracement to that level as well. So here is another one. So there's the high, there's the low. Okay, so there's the high, and there's the low. Where's it coming to? 61.8. What else is at the 61.8? This swing high, the 200 EMA. So there is something going to happen here, and it does. And then you can fine tune your entry because there is a level there. You can see that's the one it's aiming for. And down we go. Okay, now the rule of thumb with price action is that you're always expecting a second move. So if you have a single move in a direction, you're always expecting it to retrace somewhat and then extend. Now I'm going to use, let's just get rid of all of this. Okay, so let's just use this level here. So we looked at it earlier on. You can see how we are interacting with 38.2. I'm going to swing it around. Okay, so we've moved from there to there. We've retraced to a level. Okay, we've broken this. So I would expect these levels to come into play. So this is the first level I'm expecting to come into play. And we're kind of flirting with it, but we haven't got there yet. And this is where we are right now with the DAX. Okay, now again, let's just take a small one here. So from here to there, look what happened. It came back to the 61.8, which also coincides with the level on the left. Okay, let's just delete that. Put it in again, but I'm going to swing it around. I want to know where we're going now that we've broken here. So we've already hit the first target at 161.8. The next logical target is the 200. Okay. Now I want to just come back to, we have some levels here. So we have a daily level sitting here. Okay. Let's come back to the hour. And the daily is just above the 200. Okay, so the Fibonacci really, you can see how price interacts with those levels on every move. So you're always expecting price to go up, then you're expecting price to come down, and then if you're in an uptrend, you're expecting price to go up here. Okay, and the critical parts of this are the swing highs and the swing lows, because if you break that level, then obviously we're making a new high, which we're going higher. If we break down below this level here, I think we just need to add another little line here. If we break below this level, then obviously we're going lower. And Fibonacci is just telling you where people are taking profit or where they're getting in on the market. Okay, so it's just it's a very interesting phenomenon, which if you want to find out more, just do a search on YouTube, and you'll see it's a lot more than just price action on trading charts. It's the way the world works in actual fact. Okay, so that's kind of how I use the Fibonacci, and on every swing high and swing low, I'll always put a Fibonacci in, and basically what I'll do is the following. So what we are expecting here. So if we do start getting a turn, I'll have a Fibonacci on this, and I will just quickly put in a block between the 50 and the 60 over there. Okay, and then we just get rid of the noise. And now what I'll do is I'll look for any other levels that are in this area, and you can see immediately there's this tail here. So there I have a level, and it coincides with the 61.8 Fibonacci, so that would be a good area for me to go long. Okay, if we break below here, then obviously we're heading down. Okay, so that's kind of how we use the Fibonacci, and I use it on every swing high, swing low, just as a confirmation whether I'm lining up with a level. If I don't line up with a level on any of the Fibonacci levels, then I'll wait. But if I do line up with a level, I will place a trade at that level. Anyway, guys, hope that helps, and catch you guys later.